Thank you so much for coming here. It's been a year. Here we are again, and lots of leaders, everyone is here talking about especially with Lagarde's speech, the leadership. And that for the world, she's urging everyone to put the leadership on the foot. And EU is in plans by the speeding of the ESM funds. Right now, we got all the news. So where are we here now? What kind of message should we get out of the IMF and World Bank meetings, especially relating to the European crisis stemming from the Greece and other banks?
Well, the first message that we would like to communicate is a message of concern. The situation is not nearly as good as we would have hoped. Only a few months ago we had very rosy forecasts for Europe. Now that's not the case anymore. We predict a significant slowdown with some concern about a possible recession. So we're clearly talking about a different policy mix, and we are recommending that the authorities pay a lot more attention to the immediate concerns, the immediate downside risks in terms of growth.
How are they going to do that?
Well, first of all, we don't need to pay so much attention to inflation in the Eurozone, which is under control and not really a major problem. We could have some countries where there is some space for fiscal policy that they could perhaps not tighten so quickly. So there is some possibility of a slight change in policy mix, which would be supported. But of course, the most important thing would be to make important steps forward in the resolution of the sovereign debt crisis. That's really the priority. That's the dark cloud that hangs over all of us. And that's where we have been calling, especially our managing director, for a very determined, urgent plan where everyone will work together to achieve this common goal. Every single European country, the European Central Bank, the EFSF, the European Financial Stability Facility, and of course every single regulator and even market participant. We have all of us to work for this one goal of restoring confidence in European markets.
And that brings me to my last question. You said among other countries, for example, Turkey has been one of the countries among the emerging markets which was shunning the investors, and also all the financial crises that happened in Europe kind of bypassed Turkey. Where do you see Turkey among all the emerging markets?
Well, Turkey is an exceptional story of very strong growth, very strong growth, very good performance in terms of employment and so forth. But it is a very volatile country. It's a country of ups and downs, where in fact sometimes there is a great deal of capital inflow and the economy booms, and then there is concern about capital outflow and there is a contraction. There's very large current account deficit.
Are you worried about the current account deficit?
Yes, we are. And we're also very worried about the Turkish inflation. So our recommendation to the Turkish government is to focus somewhat more on stability.
Okay.
You know, making the economy more resilient, more robust, more stable, at the same time that we commend them for achieving such strong economic growth.
Thank you so much. I know you have to go, you have to be somewhere, but thank you for the time and also all the wonderful speech that you gave at the IMF World Bank meetings. Thank you.
Thank you.